Today our discussion is on the accounting for general and special revenue funds. Governments will often have things like capital projects, and that's something we're going to talk about in a minute. The picture here is of the courthouse in Portsmouth. And while this is no longer a courthouse that's in use, at one time this was a very pricey project for the city, and at that time it would have had to have been handled with most likely a capital projects fund. So first, here's some basic definitions for us to remember. We have talked about these before, so they're not exactly new. First, we think about permanent funds. And a permanent fund is where the principal is restricted, but only the earnings can be spent. A capital projects fund, and that's just like what I was talking about with the courthouse, is one way the city of Portsmouth or any city government could build a new courthouse is they could set up a capital project fund. And whether they put city money in there, whether they ask the state for help, whether it's a federal courthouse and they ask the federal government for help, they could set up this fund, and then any money coming in is restricted to merely building the courthouse. You can't do anything else with it. Also notice though, you could put committed funds where the city might or the state might say they've committed it to the courthouse without a legal restriction, or they might have sort of assigned it or designated it to the courthouse. We have debt service funds, and these, for example, are when a fund is being used to pay down debt. And here, the only thing that the money can be used for is to pay down principal or interest. Special revenue fund, you'll see in my slideshow, I later on have the example of a golf fund. Now keep in mind, a golf course for a city could be like a special activity that the city does. But in our case here, a special revenue fund is when there's specific revenue sources committed to an expenditure. So for example, the golf fund, if it were a special revenue fund, might take golf fees from players. I hope you know that any money a city collects to run a golf course is not nearly enough money to cover the cost of the course. But the state, if we're talking Portsmouth, the state of Virginia might say, well, we're going to commit some money just so city you can get something done for your golf courses. And it's possible that even certain federal money might be used for that. Well, now we think about various types of interfund transactions, and that's really the thrust of our discussion today on accounting for the general and specific fund. So as we think of interfund transactions, we have two basic types. The first is called reciprocal transactions, and what we mean here is you do for me and I do for you. So for example, if the general fund does an interfund transaction with a special revenue fund, the general fund gets something and the special revenue fund gets something in return. We give the example here, there might be inter-services provided, or we might have interfund services used. The second type of interfund transaction is a non-reciprocal transfer. And this is where, and it can happen with governments, the two funds aren't going to do things for each other. The general fund may turn money over to the special revenue fund, and a special revenue fund may well not return it back. Now let's actually break some more common transactions into reciprocal and non-reciprocal. So one common transaction is an interfund loan. So the way you might have an interfund loan work is that resources from one fund to the other might be, one fund might provide resources to another, and there's the intent that it'll be repaid. So in my example, notice that the top transaction is done in the general fund. And the nature of the journal entries may be unique to you, but by virtue of you being in Accounting 219, the basic idea of a debit and credit should not be unique. So here you go. You've got an asset, account 150 in the general fund, due from other fund, which is a receivable account, for $500,000. And this is being booked in the general fund because the general fund loaned the water fund $500,000. Now, in my example, the water fund, unlike unlike the golf fund coming up, the water fund here is not exactly a special revenue fund. Rather, it's a like a fund doing a specific task for the government. So in this case, the only thing the water fund's doing is providing water to the citizens of Portsmouth in this case. So now the reciprocal transaction done in the water fund's books are debit to cash. And I kept the number 101, although it's now the water fund, just to illustrate that cash is usually the same number. But on the water fund's books, we have a credit, which is a liability. So notice the general fund had a debit and an asset. It had a 100 number. But the water fund has a credit and a 200 number, and the numbers don't match up. So please don't try to match up the numbers in the general fund to numbers in the other funds. We're going to talk about the waste management fund next, and here's just a visual as you think about that. So interfund services are considered reciprocal, and this might be that the general fund buys services from an internal service or an enterprise fund, and I've set up the waste management fund as an internal service fund. So here, the only thing waste management does is provide trash removal services for the government. So the government might well have set up separate funds, including one for waste management. Now, the general fund is going to buy trash removal services from the waste management fund. So the way it does that is it debits, in this case, general fund account 633, which is waste management expenditures, for $25,000, and it pays cash. So this is very similar to a for-profit that might have a debit to an expense and a credit to a cash account. But there's something else going on in the waste management books. Notice I've used the acronym IS, which stands for internal service. But in this internal services books, waste management's books, you've got a debit to 101 cash. They were paid by the general fund, so they got cash in. And here, the account 401 is a revenue account. So waste management services collecting $25,000 from the general fund. These are the reciprocal funds. The non-reciprocal funds. You might have an interfund transfer to a special revenue fund. So I've set up golf. Now, what I was trying to get at earlier is golf could be internal service, but I'm using it as a special revenue fund. So we're thinking about all the different revenues that we would take in specifically for golf and handling them in the special revenue fund. So here, there's a transfer. The money's not coming back. So the hypothetical example I set up, and this is common for governments, is perhaps a special revenue source had been set up, like maybe the state or the federal government. And then they say, we're not going to provide funding anymore. We need to cut the budget, so we're not going to provide funding for the golf courses. Well, Portsmouth just can't close the courses. So if $100,000 used to come from the state, now the general fund might provide other money from the city, system. So that's what you have here. You have no plan to repay the money, an equity account, other transfers out, other financing uses transfers out, where the general fund is going to transfer $100,000 to the golf fund, and then a credit to cash because that's actually the asset they're sending out. Meanwhile, you've got a debit to golf. Golf 101, you've got a debit to cash for 100,000 because golf fund's actually taken in this 100,000 from the city. And then this time you've again got an equity account, and you've got transfers in. I realize the pixelation's not too great here, but you actually have the image of a golf course. So another type of non-reciprocal transaction is you could have a mistake. Something you can already tell with the idea of this interfund accounting that it can get more complicated than a business's accounting. And so you might have had a case where the bill was paid out of the golf fund, but remember that's a special revenue fund. So things should more or less be transferred in and out of there, but instead we actually pay an insurance bill out. So in the golf fund, we debit $625 insurance expenditure and we credit cash 101, and we shouldn't have done that. Instead, it should have come out of the general fund. So the first thing we have to do is correct what was wrong in the golf fund. And you see all this middle entry does is reverse what we did in the first entry. And then the correcting entry is done. And here we debit 620. Notice insurance expenditure has a different account number in the general fund than it does in the golf fund. And we credit cash. Well, I hope this has made sense to you and you enjoyed the slideshow. Give me a call or let me know if you have any questions. Obviously, this is not a comprehensive discussion about interfund transactions and the general and special revenue funds. It is merely a compatible particular slideshow dealing with a particular point. Take care.